You may or may not have heard the name Stellantis, but you certainly know at least some of its 14 brands. 4 of them American. Stellantis is the 5th largest automaker in the world. It had a banner year in 2023, but 6 months later, the company is struggling. After hitting a high in March 2024, shares have fallen by more than half, and shareholders are losing enthusiasm.
The whole discussion on Stellantis has basically collapsed. We're not talking about free cash flows, we're not talking about long-term EV strategy, we're not talking about market position or the China Leapmotor joint venture. We're only talking about how much will it cost the company to get rid of the US inventory.
As a result of the disappointing US sales, profits have fallen by nearly 50% and market share is down.
It is an understatement to say that H1 2024 results were disappointing and humbling.
The dealer body, and evidently the UAW as well, believes we're on a bad track that was all self-inflicted.
On September 30th, 2024, the company slashed its forecasts for full-year profitability and cash flow. The stock plunged nearly 13% by closing. There is mounting pressure on Stellantis' CEO and calls for him to step down. So, how did Stellantis get to this place, and can it recover?
Yeah, this is an interesting topic that they're covering. I am not familiar with the name Stellantis, but I would say I don't see that many Jeeps out and about in the US. So that definitely would make sense that they're not doing as well. I'm also curious how they have transitioned over time. I feel like some Jeeps feel more high end and have kind of like a premium price tag associated with them. I'm curious if this has to do with that transition that Jeep seems to be taking on, where that category of vehicle is taking on, as well as kind of like inflation, et cetera, where there's probably just more cheaper options that are enticing to folks at this point in time where they're more cost conscious. So maybe that's an aspect of it where so many other vehicles exist out in the market. And so you aren't necessarily going to be a loyalist to a brand in a scenario like the one that we're in, where markets are tough and folks are struggling to make ends meet.
Check out these charts. There's Stellantis' financial results for the first half of 2024. The stock's full-year performance as of early October. Shares have fallen from a high of $29.51 in March to just above $13. And it's mostly due to poor US sales of its American brands. It isn't the only automaker going through tough times, but it is one that has lost significant market share to its rivals over the last 3 years. In September, several officers of Stellantis' National Dealer Council sent an open letter to the company, accusing management of being behind the troubles. Dave Kelleher is a Dodge, Jeep, Ram, and Chrysler dealer in Pennsylvania. 3 years ago, dealers like Kelleher were earning profits of about 4.5% of sales, which is strong for the industry. The benchmark is 4%. But now Kelleher says the average is less than 1%.
That's caustic. We have 900 dealers in the country that are actually losing money and a bunch that are really close to it.
In the same time period, the values of those dealerships have plummeted from 5 to 5.5 times earnings to 1 to 2 times, depending on the dealership's location. Kelleher is selling 100 cars a month, whereas he used to sell about 185. As of mid-September, he had 473 cars on his lot, collectively worth about $27 million. Bear in mind, dealers buy their cars directly from the automaker. Kelleher has been selling these cars his entire career and has seen the ups and downs. This time, he says the troubles are of Stellantis' own making.
Dealer morale is at low. Corporate morale is at an all-time low. So I would suggest that this company, I don't know what their end plan is, because they certainly don't tell us. But for 2.5 years, we've explained to them that we think we're on a bad path and nothing's been done to it.
The dealers aren't the only discontent stakeholders. The United Auto Workers Union has been threatening to strike again. And earlier in 2024, Stellantis suppliers were halting production over pricing disputes. The disputes have spilled into the courts.
North America.
So it seems like they're kind of setting up this narrative of maybe this particular automotive company is basically pushing for profits for themselves individually. So maybe they're cutting on costs for manufacturing, cutting on costs for the dealerships, and potentially cutting quality of the vehicles themselves. Seems to be the segment that they're in. So they've kind of been more focused on taking advantage of the market as opposed to innovating or having good products, might be the stance that they're taking.
Operations were, highly profitable and kind of seen as a little bit of a cash cow. Maybe the idea was it could run itself with not much influence, but it still needed support.
Stellantis has only existed for about 3.5 years. It was created out of a merger of two major automakers, France's Groupe PSA, sometimes known as Peugeot, and Fiat Chrysler, which was itself a merger of two other companies, the Italian maker Fiat and the American Chrysler, a company with a long and tumultuous history.
Chrysler has always been the weakest of the three major producers in the United States.
It had the smallest market share of the Detroit Three, the three major automakers based out of Detroit, Michigan. Here's what volumes looked like for the Detroit Three in 2007, 1 year before the financial crisis. By 2009, Chrysler and GM both went bankrupt.
Chrysler will file for bankruptcy after failing to reach a deal with some of its debt holders.
Then came the merger with Fiat.
The continuity of Chrysler was at risk. So whether you like this decision or not, it is the only path that kept Chrysler alive.
So they seem to be going down this path of potentially mismanagement. Though curious as to what that would entail, because again, you still need something to impact the business. So like if there's mismanagement there, that would be examples would be like having too much inventory, like too much supply for the demand, not keeping up with industry trends. There'd be a variety of scenarios where mismanagement could be the factor, potentially like misusing funds as an example. So they haven't quite explained which type of mismanagement is going on here yet, but curious to see what they'll say on that.
Gone through certainly more than one near-death experience in my lifetime. And it's a testament really to the brains and work ethic of the people at the company that have really pushed Chrysler back to the brink each time.
A revival followed under the leadership of former FCA CEO, the late Sergio Marchionne, whose turnaround at Chrysler was at times considered miraculous and at others marred by controversy.
He went in and he understood that he needed to make these brands like superstars. So he went into the engineering and he built the entire product portfolio. He found these people that really were terrific, like a Tim Kuniskis, for example, who took Dodge brand and just made Dodge brand vibrant again.
The Jeep, Dodge, and Ram brands all set sales records in 2018. The Ram truck was taking share from its competitors, the F-150 and the Silverado. The Dodge Challenger was a muscle car, a declining segment, and the car itself saw few significant updates over its lifetime. But that didn't matter. It eventually outsold both the Chevrolet Camaro and the Ford Mustang. Despite all the success, Fiat Chrysler's board was long known to be looking for a deal. First with the American GM, then the French maker Renault, and then Peugeot.
Welcome back. Jeep parent company Fiat Chrysler merging with European automaker Peugeot to create the fourth largest automaker in the world.
Peugeot had a strong presence in Europe. The company had already bought GM's Opel and Vauxhall brands. In some sense, it seemed like a natural fit.
The two companies in that sense were already very accustomed to co-developing products together. They knew each other's cultures already because they've been in heavy collaboration for, since the 80s on those commercial vehicles. So culturally, it made sense.
But there was also the opportunity to cut costs and save billions of dollars through synergies, such as sharing parts and platforms. This could also reduce the burden of investing in extremely expensive new technologies like EVs, automated driving, and software. And of course, pay money out to shareholders.
And at first, the market was quite doubtful whether Stellantis could pull off the $5 billion in synergies between the two companies that they had announced. They didn't only manage to pull out the $5 billion, they managed to pull out kind of $8 billion, and then they stopped counting.
In the middle of the merger, the coronavirus pandemic hit. The factory shutdowns, supply chain disruptions, and materials shortages severely constrained supply. Dealers made up for the lack of inventory by raising prices on the cars they could sell. Customers paid, and dealers made profits.
Now, everybody knew that this was a short-term situation, that eventually people would go back to work, supply chains would correct, and vehicle profits would go back down towards where they were.
As the pandemic rolled on, automakers started raising prices too. Stellantis did it much more aggressively than others.
So a Jeep Wrangler, which used to be a pretty, basic vehicle, very affordable vehicle, increased 30+%.
Yeah, so this seems to be the area that they're kind of highlighting potential mismanagement on, and some of those kind of like profit focused segment of trying to like squeeze out the dollars from everywhere else. So it does seem as though they were sort of taking advantage of this scenario the most, which is when the shortages started to come in. It sounds like they're highlighting that Stellantis basically increased their prices disproportionately to the rest of the market. And then this is likely biting them post COVID and once those shortages are done, because then you lose basically like brand trust due to activities like this. This is something that like I know this is big in fast food at the moment, where like I think classically folks are thinking about McDonald's, where their prices surge like 2x or something like that over the course of a couple of years. And then now they're starting to like pull back on those changes after folks like Chili's or other folks were basically trying to undercut them at that point, because they got so far out of hand with these price hikes that basically like fast food was more expensive than getting like a sit down meal. And so then they started to lose customer at that point, and then folks aren't going to come back once you lose that trust. So this seems to be the segment that they're referencing here for Stellantis.
During the pandemic, that's more than their comparable vehicles did.
The company also started releasing some very pricey new models, including the Wagoneer and Grand Wagoneer, two 3-row SUVs priced starting at around $60,000 and going all the way up to $120,000.
That's a stratosphere that Jeep has never been in before. Now you're competing with Range Rover, you're competing with Escalade.
The price hikes, along with the internal cost cuts, provided Stellantis with a year of record sales, profits, and cash flow. But things were already beginning to slip.
Over the course of the pandemic, products weren't being refreshed, products were kind of starting to languish, yet the positioning and pricing was going up. And consumers certainly voted with their pocketbooks and went elsewhere.
There were product quality issues, including on new and high-priced vehicles, such as the Wagoneer models.
If you want to charge a premium price for your product, the consumer is going to expect extra features, extra benefits. They want to enjoy that product. And if it's in the shop a lot because the fan is so loud in the Wagoneer, or that AC doesn't reach the third row, or other quality issues that Stellantis has had with its products, they're not going to recommend that vehicle to their friends.
At the same time, the company cleaned house, removing models it no longer considered sufficiently profitable or worth producing. For example, the Jeep Renegade, Jeep Cherokee, and the Chrysler 300. But the Cherokee was a mass-market mid-size SUV that used to compete with top sellers like the Toyota RAV4 and Honda CR-V. The Renegade was in the popular and relatively inexpensive subcompact SUV segment. The Chrysler 300 was one of the automaker's last sedans, key to bringing customers into the brand and hopefully keeping them for years or even a lifetime.
We had the best SUV lineup in America. We had a great Ram truck. We had commercial vehicles. We had sedans. I had a full menu. We don't have that any longer.
The Charger and Challenger were folded into one nameplate. The closely related Chrysler 300 is gone, and the company's big V8 engines are being swapped for smaller inline-six ones,
which really bothers our Ram customers. And the turbo engine is not a bad engine, and actually it can give you the same horsepower and torque as the Hemi, but that doesn't matter to our customers. I mean, that Hemi was legendary.
The Dodge Hornet, a newish small SUV based on an Alfa Romeo product, hasn't sold well.
The Hornet, as you know, has been sort of a flop in the marketplace. It has one of the highest days supply of any vehicle in the US market right now. It's not priced right, and it's too small compared to the competition.
Of all the brands in the US, Stellantis brands are among those sitting on dealer lots the longest. 5 of the 8 brands with the most days supply are all Stellantis brands, including every Chrysler brand.
Yeah, that's very interesting. So basically they're highlighting this data that's showing that the market is not interested in these. This is actually very interesting data overall, and how quickly folks are buying up some of the supply, which makes sense. If you're going to have a vehicle that they're basically arguing not only did the price increase quite a bit, but actually the features and quality of those vehicles weren't increasing proportionally with the rest of the market. And so if your product is basically getting potentially worse compared to competition and the prices are getting higher than competition, you're not going to be able to sustain that for so long. So this is definitely something that we're seeing in a variety of places, especially with inflation being so high recently. Some companies try to take advantage of this trend and just keep hiking prices continually and just assuming that the market was just going to absorb the prices and just keep paying for it. And there's definitely a number of companies right now who are kind of having this situation turn around on them, where they've taken it too far to the point where customers are pulling back and they're now going to start to struggle. So this definitely does seem to be a somewhat recurring theme across a variety of industries right now.
That means they aren't selling. Dealers like Kelleher say this is due to high prices overall. He estimates that the average price of the cars on his lot is about $60,000. The average price for all dealers is far lower.
The market is really worried that to move those cars that are sitting on dealer lots, Stellantis will need to give hard cold cash to dealers to get those cars out the door.
Dealers and analysts say the company is starting to offer some incentives to try to move cars off their lots and make way for the 2025 models Stellantis is hoping to sell them.
We appreciate the fact that they finally heard us and gave us some money to help us sell these cars, but it's probably not enough.
From an equity perspective, it would have been much cleaner if they had kitchen sinked it on Q2 or the Capital Markets Day and had said, look, we're just going to take a bunch of money, put that on the cars, we'll get the cars moving, and we'll go back to a good business. But that's not what they did. Basically, Carlos set targets for the North American team, and when the North American team did not achieve those targets, he simply started exchanging management.
A lot of former top Chrysler executives have left the company in recent years, such as former Dodge CEO Tim Kuniskis and former Jeep and Ram executive Jim Morrison, whom Kelleher credits with playing a part in reviving the Jeep brand.
He was an integral part of that. You know, we've lost some guys that know how to sell cars in North America, and they left for two reasons. One is they were being turned down on every initiative they came up with. And then two is when they didn't succeed, I think they were taking, extraordinary emotional beatings over it. They were led to think that they failed, even though they were handed a shotgun with one bullet and asked to go out and shoot 6 deer.
So in the short term, Stellantis needs to sell more cars and clear out dealer lots. Long term, critics say Stellantis doesn't have enough fresh product and the right kind of product.
And that's what Marchione understood, that you needed to build a dynamic lineup and you needed to have a plan that replaced these cars on a regular regimen. And I don't think we have that plan right now.
There are several vehicles on the way. The company plans to replace the Cherokee with a new SUV in 2025. It is one of several new products slated for release in the coming years.
Despite the fact that Chrysler Group brands are struggling in the US right now, there is a lot of innovation coming down the pipeline.
The Jeep Recon, an electric SUV that would compete with products from companies like Rivian. The revamped Charger is set to hit dealers by the end of 2024, including the electric version. Even Chrysler is set to have at least 3 new products starting in 2026, including an electric Pacifica minivan and 2 electric crossovers. Ram is slated to release a fully electric pickup and another truck called the Ram Charger.
So at least as they're transitioning into this segment, taking a step back, clearly this company has kind of rested on its laurels for too long. But in my perspective, this is exactly what basically the positive sides of having our capitalistic society and market is, that basically we had this one automotive company who stopped innovating, started trying to charge too much for their products. And while this isn't great for that particular company or maybe loyalists of this brand, for the broader market, this is actually pretty good in so much as they're going to be forced to do this innovation, potentially even perform innovation and cut costs. And so this is actually one of the healthy segments of the market where a company struggling isn't necessarily a bad thing. Obviously, when every company struggles, then obviously the market itself is not doing well, and that can be a bad sign in general. But one-off companies like these, who basically fail to kind of adjust to the market adequately, this is going to create opportunities for the other companies who have been innovating, who have been cost conscious and been trying to get as good of a deal as possible for their consumers, and also potentially allowing the possibility of like new incumbents coming in. So maybe somebody who has been a fan of Ram or Dodge or Jeep, even some of these other executives that they're highlighting, maybe are going to other companies or potentially starting new companies. And that's exactly how a healthy market would behave, which is as one company basically starts to fall out of touch with what the customer needs, new ones can take over and kind of get more profit share, and then hopefully feed those into better innovation and continue to help the market push itself forward. So while it's not great for this company, this is, in my opinion, a good sign that things are in a healthy state right now, where they're not able to just take advantage of the market and their consumers by having exorbitant prices and not innovating. They're being forced into this scenario. It's unclear from everything that they said if they're going to be able to innovate at a rate that allows them to come back and become a big player again in the automotive space. But at the end of the day, the primary goal is, especially from the consumer perspective, is to have innovation in products, to have a better price point. And so this should lead towards that ultimate outcome. So we'll see what else they have to share on this.
It's electric, but comes with an onboard generator that charges the battery. This helps with towing and long-distance travel.
Range is important and all that. And that's one of the things that has been keeping a lot of potential electric truck customers from, pulling the trigger.
There are competitive products already in the lineup. Jeep's 4xe hybrid technology can go 20 or 30 miles on electric power. Stellantis' plug-in hybrids, including the Wrangler 4xe, are top sellers.
Mostly these are being used to go get groceries or pick up the kids from school or go to work. But nevertheless, that's a technology that is been selling very well.
Jeep is on a tear, a lot of new product, and can generate a lot of interest and excitement.
Upcoming products are too heavy on EVs for Kelleher's taste.
I think either Mr. Tavares or somebody has got to take a more aggressive strategy on what our product plans are and understand that electric, if it's an immediate product plan, is going to be a complete failure.
However, Stellantis' new Stella platform can accommodate gas-burning internal combustion vehicles, hybrids, and EVs. When Stellantis introduced the strategy, its inclusion of 3 different powertrains seemed like a waste at a time when EVs were expected to rapidly take over the market.
And I think that flexibility to kind of insulate Stellantis a little bit from the pace of electrification, that's going to be a real benefit in the upcoming years. And what we're seeing right now is kind of a tactical issue, something they'll need to work through. So I think on the strategic side, Stellantis has done a very good job, or as good a job as an automaker can in these challenging times. But they took their eye off the ball in North America, and it will take probably another 6 to 12 months to correct that.
Stellantis declined CNBC's request for an interview, but said that it built an action plan designed to turn the corner in the second half and beyond. Stellantis also said in a public response to the dealer letter, "We have started a path that will prove successful. We will continue to work with our dealers to avoid any public disputes that will delay our ability to deliver results, and reduce dealer inventory by 100,000 vehicles by the beginning of 2025. The plan takes into account input from our dealer partners, and those efforts are paying off."
Well, thank you for watching. If you enjoyed what you saw, please hit like or subscribe. I will see you around.